Hello again, this is John Piper, the author of The Way to Trade Better, among other books, and this is the third extract from the book itself. In the last extract I looked at focus, one of the 5 pillars. In this extract we're going to look at the other pillars being right style, right trading, right size, and making these into winning habits, also known as transformation. So starting on page 9 of the book, right style. The first edition of The Way to Trade was subtitled, Discover Your Successful Trading Personality. This trading personality is essentially your style. There are many different ways to trade, and even when you have decided on your focus, there are a large variety of ways in which to trade that focus. For example, your focus may throw out daily market targets, you may call these magnets, and your focus may be to trade from the open towards that target. But some traders may adapt a relaxed style, simply placing a limit at or near the target and an appropriate stop before they leave for the golf course. Another trader may adopt a far more aggressive style, perhaps carefully watching the opening action and quickly closing if it does not go the right way, or moving stops quickly to lock in profit if the market does go in the right way. In both cases, there is the same or very similar focus, but very different styles. So which style is better? That may depend on how much you like golf. But more importantly, it will depend on whether the trader is getting what he wants. If both traders are expert in their approach, then their styles may well be equally good and give them both what they want, and of course these may be different things. Your style of trading will also depend on your personality and psychology. You could say your trading style is a reflection of your personality, your core values and your beliefs. Next pillar, right trading. The concept of right trading is straightforward, but involves 2 distinct strands. Firstly, your focus must give you an edge, an expectancy of profit over time. Secondly, you must trade it correctly, so you realize that edge. The first goes to the essence of professional trading and means carefully testing out your focus to ensure it is a money-making proposition. You're responsible for how you trade, and you need to test carefully to ensure your approach will make money. The second phase is simply trading well to realize a positive expectancy of your approach. Once you're doing so, and are confident that you will continue to do so, you're ready to move on to right size. But first, a few words about right trading. In my book, Binary Trading, I set out a complete set of parameters for how to test out systems, back testing, forward testing, increasing size, etc. So if you're unsure of how to go about the testing process, then that book will help you with that. On to right size. This is the 4th pillar. This is when you start to be in business for real. The key points are important. You have defined your focus. You've become expert in these areas and developed your style. You have carefully tested out the components of your trading in the markets and know that you have an edge. You've proven this in real-time trading. You understand the key concepts of money management, which is part of your style. Once these factors are in place, you must increase the size of your trades if you wish to make serious money as a trader. As you progress, and if you have got it right, your account size will grow and you can continue to increase size of your trades. You always need to have regard to money management. At its simplest, this means not risking too much on any one trade. My suggestion is that you should set your risk parameters at between 2% and 4% per trade, although larger traders tend to go below that level, maybe down to 1%. That means that you take your total trading pot, which say is £10,000, and risk between £200 and £400 per trade. As a rule of thumb, it's better to risk less rather than more. This may seem low, but you need to realize that losses will happen, and you have to be able to deal with them without serious depletion of capital. For example, if your trading approach gives you a 50% hit rate, that's 50% winners, 50% losers, and this is quite usual, but your winners need to be bigger than your losers on average to give you that much needed edge, then every 1,000 trades you will statistically see a consecutive string of 11 or more losses. No one expects this unless they're familiar with statistics, but if you were trading at 10% risk per trade, you could be wiped out quite quickly. Plus, bear in mind that if you halve your account size, you then have to double it, achieve 100% profit, just to get back to where you started from. Such an achievement is not easy, so it's best not to halve your account size in the first place. By risking 2% to 4% and basing this on your pot as it increases and decreases, you minimize the effect of the inevitable losers, and you're still around to make hay when you see a string of winners, 11 winners, which is also statistically likely, but no one ever complains about that. Here again, psychology will be involved in your risk management. If you're of the type who thrives on high risk and excitement, take extra care not to allow these tendencies to lead you to ignore the above recommendations. Money can raise many psychological issues, but the fact remains you'll need to deal with this stuff if you want to make trading your business. If you are emotionally a poor loser in competitive situations, this may negatively impact on your ability to deal with the inevitable financial losses you'll experience when trading. As you work on this, you automatically get to the next pillar, which is making these winning habits. But a quick note about the psychological issues that may come up when trading in larger size. We recommend our trading coach Les Meehan in these situations. He can make a big difference to traders who are struggling with higher size. That can impact you in a whole lot of different ways. Les actually helped write the book. He made a lot of great improvements to the book, and he does offer, or from time to time, not all the time, but a free consultancy. If you're interested in going to the next level, please just send me an email and I'll sort that out, or at least ask Les whether he has that capacity at the time. He also offers some very reasonably priced courses, which again I can only recommend highly. Right, after that quick commercial break, I'll now discuss making these winning habits. Most of what we do as human beings are habits. Some of us adopt winning habits and become wealthy and successful. Most people, for whatever reason, adopt losing habits and struggle. I guess one of the reasons for this actually is probably because people find obstacles, they get set back. Maybe, I know, as a child they weren't given the confidence they required, so they took the knockback quite seriously and gave up. It's very, very important not to give up. I mean, this is the critical point. You have to persevere, keep going, learn, and join the top 5%. It's absolutely essential that you keep trying, keep taking risk, and keep failing. The more you fail, the better, because the more you learn. I mean, trust and integrity are also extremely important in these issues. If you're running some kind of business, and you've got any business is a relationship between human beings, and the foundation of all good relationships is solid trust. A lot of this may have to do with the human instinct to herd. You need only look in your local pub or at a football stadium or rock concert to see how we love to herd together. The people who succeed tend to be those who are happy to go it alone and do things differently. There are also people who have a very positive success attitude. They view success, wealth, and successful people as desirable as inspiring. Later in this book, we'll be looking at how the herd generally approach trading and why they lose. If you want to win, you must not do these things, and you do need to adapt the processes set out in this section. These processes at root are fairly simple. If you keep doing them, you'll become successful. Successful habits as opposed to these destructive habits, which are all too common among the majority of traders. We're all too prone to adapt bad habits, and these need to be eliminated. This can be a lot easier said than to do. As an example, I decided I was drinking too much alcohol, and in November 2012, I cut out alcohol for a full year. I found this easy to do, and I think I'd managed to self-hypnotize myself. In any case, it was no great problem having zero alcohol for the year. I was concerned that if I started to drink again in November 2013, I'd be right back where I started from. But I was pleasantly surprised to find instead that I was able to take or leave alcohol pretty much at will. I'm not saying that bad habits may not return, but for now I've eliminated the old and am much happier with the new. Remember, a habit is formed by repeating an activity, and your subconscious mind doesn't know or care if the habit produced is good or bad. In terms of your trading, you need to identify and isolate the bad habits you've built up and then eliminate them. Again, this is much easier said than done. Bear in mind, many of our habits keep us alive on a daily basis, so most of them are extremely useful. Unfortunately, too often, many of our habits subtly undermine our attempts at success. When we start to look at peak performance in any area, we need to change our less useful habits to succeed, and we'll be looking at this in greater detail in section 5 of the book. Finally, I'll add what I term a sixth pillar, the ability to take control. You cannot be a successful professional trader unless you decide what you want and you go out to get it. My first book in the series, The Way to Trade, was all about developing your successful trading personality, and that's part of it. Decide what you want and go out and get it. It goes beyond this too, as you need to actively increase stake size and learn to deal with that at each stage. Your unique relationship with money may be a key factor in this process, which is where Les Meehan may be a huge help. This 5 or 6 step process outlined above works well in any aspects of life, suitably modified as required. In the next video, we'll be looking at the trading pyramid, which is a summary of what I discussed in my book, The Way to Trade. I would mention that I'm also doing audios. I'm extracting the audio from the videos so that you can also listen to this as you're driving or whatever, if that's what you'd like to do. Obviously, it's purely optional, and I'm trying to make this as accessible as possible in whatever way I can, which is why feedback is always welcome. And if any way I can improve this presentation in a way that would help you, then please let me know. Thank you for listening, and bye for now.